Hello everyone, greetings of the day. A very happy new financial year to each one of you. Looking forward for another year of excellence, growth and commitment towards the CA profession. Myself, CA Divya Chandra, and in this video, I will be summarizing the important changes which will take effect from 1st April 2025 onwards. One of the most happiest change which is going to take place is the change in the income tax slab rates which will be implemented from this financial year onwards, with individuals earning up to rupees 12 lakhs annually will have to pay no income tax. The standard deduction on salaried individuals will also increase to rupees 75,000. So, salaried individuals making salary up to 12.75 lakhs annually will have to pay no taxes under the new tax regime. So, really a very happy financial year. There are also changes in the UPI payments. UPI payments from inactive numbers will no longer be possible. Mobile numbers linked to UPI that have been inactive for a long period must be updated with banks before 1st April to avoid losing access to the UPI services. Another change in this series is regarding Unified Pension Scheme, which was introduced in August 2024, and it will replace the old pension scheme starting from 1st April. It will affect around 23 lakh central government employees offering a pension equivalent to 50% of at least 12 months basic average salary for those with at least 25 years of service. In this series, there are also changes in the GST rule. The GST portal will implement mandatory multi-factor authentication for taxpayers, enhancing security. Additionally, e-way bills can only be generated for documents not older than 180 days. From new financial year onwards, there will also be changes in the FD interest rates and the saving bank interest rates of various banks. So it is my advice to all of you that kindly check the interest rates which will be applicable from 1st April onwards at the respective bank sites so that you can plan your investments accordingly. Now, another change important which is regarding the PAN Aadhaar linking. As we all know, the PAN Aadhaar linking is required, is mandatory for all of us, and if your PAN Aadhaar link is not updated from 1st April, that you will not receive any dividend on stocks. Additionally, your TDS on capital gains will also increase and you will not receive its credit in the Form 26AS. A relaxation has been made for the senior citizens. It's good news for them. From 1st April onwards, bank will not deduct TDS on interest up to rupees 1 lakhs on FD, RD and similar savings schemes. This limit is specifically set for senior citizens. Earlier, this limit was rupees 50,000, which has now been increased to 1 lakhs. So, the limit has almost been directly doubled so that it can give significant benefits and reduce the compliance burdens for the senior citizen. From financial year 25-26, the threshold limits for various TDS and TCS under certain sections of the Income Tax Act have been increased. This means that TDS and TCS will be applicable only if the transaction exceeds these revised limits, reducing the compliance burden on these smaller transactions. Another important change which will take place from 1st April 2025 onwards is regarding TDS on partners' remuneration under Section 194T, which I have discussed in detail in my earlier video. Now, this section is applicable to the partnership firms and the limited liability partnership who are required to deduct TDS at the rate of 10% on the payments made to the partners for more than rupees 20,000 in a financial year. This section covers all commission, remuneration, bonuses, salary and interest payment to partners. So it is my advice to the partnership firms and the LLPs that they apply for TAN accordingly and comply with these TDS provisions which will become effective from today onwards. Now, there's also An important change which will take place from today onwards is the removal of TCS on sale of goods. Previously, the seller had to collect TCS under section 206C1H on the sale of goods if the aggregate value of goods sold exceeded rupees 50 lakhs with other conditions. This created compliance issues with section 194Q, where buyer had to deduct TDS on the purchase of goods with the same conditions. So now the TCS section has been removed. Only now section 194Q regarding TDS on purchase of goods exceeding rupees 50 lakhs with other conditions will be applicable from this financial year onwards. Last but not the least, in this series, an important change which has taken place is the omission of section 206AB and 206CCA. These sections required a higher TDS and TCS rates for non-filers, that is individuals who do not file their tax returns. So it was a burden on the deductors and collectors to identify such non-filers and furnish returns within the specified due dates. Now from 1st April onwards, these sections will be removed. So there is no need now for a business to verify if the person has filed their tax return or not in order to determine the TDS or TCS rate. So this simplifies the compliance and reduces the burden on the assessees. So these updates are helpful for individuals and businesses to consider for smoother financial planning and to avoid any potential penalties. So I hope this video will be useful for all of you. Thank you so much. And once again, a very, very happy new financial year to all of you.